Hey everybody, welcome back to Third Wave Trades. For this video, I'm going to do a quick recap on Tesla stock, ticker symbol TSLA. As we all saw from yesterday's earnings report, the stock has been basically plummeting, and that is something that we actually called out a week ago. We said that the stock was very likely headed back down to $150 range, based off of the Elliott wave principle, which is why it's such a powerful tool, guys, if we know how to use it. So we're going to do a quick recap of that and basically talk about everything that we thought was going to happen, how it played out, and what's the next move for Tesla after we come down to fill that gap where it is likely headed. Quick disclaimer before we do get into the video. I'm not a financial advisor. This is not financial advice. Please do your own due diligence and research and or consult with a financial advisor before making any trading or investment decisions. Also, if you guys could, please hit the like button if you find this content valuable and helpful. And please subscribe to the channel to get more Elliott Wave breakdowns on different stocks, commodities, and cryptos. Also, I will be putting out a free, easy-to-follow beginner's course on the Elliott Wave principle for those of you who aren't too familiar with it but are interested in learning how you guys can utilize it to help your trading. So with that said, let's just get right into the video. So really quick, guys, over here I have the daily chart pulled up for Tesla, and we can see exactly how much we have dropped. Today we were down almost 20%. It's 162.99 is what it closed at. We can see this huge gap that we left this morning when we opened up, and the price is dropping, and is all based off of the earnings report that came out yesterday. But like I said last week, this is likely where we were headed, right? I said that we would hit 150 before we hit 200 again when we were at that critical point. As we can see over here, we are getting this crossover of the 21-day moving average, which is crossing down below our 50-day moving average. We can see on this move, we had a huge spike in volume, which shows just how strong this move is. And there are a couple of other indicators that I will go over, such as the stochastics and the RSI. But for now, I just want to show you guys, do a quick recap of our wave count so we know exactly where we are right now. All right, so before we get into our wave count, I do want to just show you guys what I have highlighted. So a couple of things. We had this gap that I told you guys about last week, which was likely to be filled, as gaps act as a magnet for price action. We usually fill it. We never know when or at what point it's going to be filled, but we will fill those gaps eventually. And I said last week that we were likely going to fill this gap before we continue on our way back up. Secondly, this whole move was our first wave. Let me draw that out for you guys. This was our first wave up. And like I said, if this was our full correction, then we would have been done and we would have been going higher. I said that that was probably not likely, given the fact there were numerous bearish indicators, and this did not look like a completed correction. It looked like there was still more room for downside, and that's why this was not the end of our second wave. It was essentially an A wave. This was our B wave recovery, and now we are experiencing our C wave. Our C wave is very likely, guys, to come down to this level, which is where we had our gap, as well as a confluence zone with the 61.8% retracement in terms of the Fibonacci tool. So that's where we are likely to come down, and then from there we should be able to bounce back and get a very strong move to the upside, which would be our third wave, and then we'll get a fourth and our fifth. I'll get into those numbers in a little bit, but I kind of just want you guys to see exactly what I am seeing here. So this, like I said, was our first wave up. From here, we have our A, B, C, which is playing out now. actually, sorry, this was a A, B, C. And now we are doing the second form of our ABC, which we expect it to come down here in this gap. And that entire move would be a W, X, Y, like we said it would be. All right, so that looks really good. That's exactly what we thought would happen, and that's exactly how it's playing out. A very sharp move to the downside. We're coming into this 61.8% retracement, which is exactly where we would expect a second wave to retrace to, which is in perfect confluence with this gap over here. All right, so that all looks very good, and looks exactly how we would expect it to look. All right, so we can expect a little bit more downside before we start a move up. So this is a great place if we come down to this 145 level, 146 level, to average down on shares, or from here, once we see a bullish reversal, to go long, but we will come to that in a second. I want to now break down this in a hourly or 2 hourly chart, just so we can get an exact wave count of what we're expecting with this XYZ. XY pattern is going to basically consist of a zigzag, and that in and of itself is going to contain 2 5-wave patterns and a 3-wave pattern, right? So it's going to be a 5, 3, 5. So we can see over here we had our 1, 2, 3, 4, 5, just like we said last week out, and now we're getting another 5 wave pattern down here. We have 1, 2, 3. We'll probably move up a little bit tomorrow, recover somewhat, and then get another leg down. So if you guys missed this move initially, you can play a fifth wave down on this leg after we recover a little bit for the fourth, right? So that's that would basically complete our correction there, right? So we have our 5, then we have our 3, which was our B wave, and then we're getting this other 5 wave down. It's actually a very textbook type of correction. So that actually makes me feel really confident in how we are analyzing the stock and what's to come next. So the next move really is just waiting for this correction to finish. And then once this correction is finished, which will be somewhere around this area, to go long once we see a bullish reversal. And once we see the bullish reversal, what are our levels? Well, assuming to measure how high we think we're going. Now, I said in the last video of a third wave up, a fourth wave, and then a fifth wave. But again, this could also be a C wave. So if that's the case, then we'll have 2 levels drawn out. So we're going to take our tool, all right, from the bottom of the first to the top of the first, apply it to the projected bottom of this third wave, or the end of the second wave. And this is the 2 levels that we're going to be looking at. We're going to be looking at the 1-to-1, and we are going to look at the 1.618. Right? If this is in fact a third wave move, we can expect this to go to at least this 161.8%. I shouldn't say at least, because a third wave could go somewhat lower, but this is the projected level that we are looking at for a third wave move. If this is in fact an ABC instead of a 1, 2, 3, 4, 5, in other words, if this is a corrective move and we have more room to the downside, then we are looking at this 1-to-1 level, where the A leg, this would be the A leg, this would be the B leg, and then this would be the C leg, finishing somewhere over here. So that would look something like this. This would be our A, this would be our B, and then we would get a C that would end over here. And then from there, we would move sharply lower and another 5 waves down. I don't think that that's what we're going to get, but just leaving that out there for you guys to be aware of. So at the very least, this is still a very great trade setup, because we know we should be at least expecting Tesla to go to this $263 level, because at the very least it's a C wave, and we can play this entire move to the upside, because even C legs move in 5 waves. So if it was a C leg, we would get a smaller 5-wave move like that. If it is the third wave, then we could expect a much more bullish move. But either way, it will be a 5-wave move to the upside. It will be impulsive, and we can really profit off of that if we time our entry and exits properly. All right. Okay, so one indicator that I'll be using to help time my entry to play this move back to the upside is going to be the stochastic indicator. Now, when we see this stochastic indicator get the crossover, we're already in the oversold area and the stochastic indicator. So once we get the crossover, and over here you can see once this black line crosses over the red line, that will be my signal to watch for. But I won't get in necessarily until we get back into this blue highlighted area. And also, in order for us to do that, then I would need the 21-day moving average to be back above the 50-day moving average. Okay, so we're essentially we want to get in when the stochastic crosses back over into this blue highlighted area while we're in an uptrend. So we can already see that we're in an uptrend from just how we are moving. Even if we come down to that level over here of the second wave, we're still in this uptrend, right? So we're going to bounce off of this. We're going to look for a bullish indicator candle pattern, something like a strong wick move where we touch this level and we wick off of it, and we finish with a strong hammer pattern. And at the same time, we have our 21-day above our 50-day moving average, and our stochastic has crossed over. Okay, risk to reward. There's a higher risk reward ratio with that, but that's a first indicator. A safer play would be to get in once we break above this level, right? We do something like this. Once we get above there, then on this retest, that would be a safe place to get in. You could double down once we take out this top over here, but that's further down the line, and you give up all of this at this Fibonacci level using the stochastic indicator and your EMAs. All right, so that's basically what we're looking at. Again, guys, we saw this move coming, and if you guys were able to profit off of that, I'm happy for you guys. It was something that the wave count was pretty strong on, that we were going to drop to this level. Like I said, there's still room to play to the downside, but just be careful, because just know that there's a very good chance that we're going to bounce soon. So just play that carefully. And the next move up is going to be probably just as strong as this move to the downside was, right? Another thing I should mention is we did leave this gap right here. So with that gap being over here, we are going to come back to fill this gap. All right, so that's all I got for right now, guys. Just wanted to give you guys a quick recap, show you guys that this was something that we called out last week. It played out exactly how we thought. Still more room for the downside before we start a large impulsive move to the top, to the upside. There's a chance that we will actually go a lot higher to levels like $330. All right, so just want to let you guys know to be on the lookout for that, and I will be back with more videos.